Characterize these results for me. How would you say the business is responding to current trading and market conditions?
Well, Dan, look, we were really proud of the result today. Our retail businesses that all pride themselves in being everyday low price retailers, their offer is really resonating with more value conscious customers. So we had record earnings growth, record earnings level in Kmart, in Bunnings, but we shouldn't forget as well our industrial businesses where we had a very strong result, a record result within our chemical, energy and fertilisers division for the year.
Rob, Bunnings continues to be a core driver. Do you think macro conditions can sustain momentum within that business unit in particular?
Well, the Bunnings offer is a very compelling offer, and it's strong across both consumer and commercial customers. And over the years, we've continued to expand the Bunnings offer. So we've expanded our commercial offer across the whole of build categories, but also on the retail side, we've added new categories such as pet products and food that are resonating really well with customers. So we're quite confident of Bunnings showing resilience through the economic cycle, and the lowest price positioning means a lot for customers.
I wanted to ask you about the landscape as well, because you really do get the sense that as an operator, you are navigating a landscape where the Australian consumer is so much more cost conscious as a result of higher interest rates, but also increasing costs domestically when it comes to general consumption. So how is that impacting the business broadly, and how would you characterize the willingness to pay among the Australian consumer right now?
Well, there are obviously headwinds at a consumer level given inflation, the higher mortgage costs that are flowing through, and savings levels for households are starting to decrease from COVID. But I think it's important to remember that the Australian economy is still in reasonably good shape. We've got strong population growth, very low levels of unemployment. There's a fair bit of demand for new housing that is required, and that benefits some of our businesses. So we're finding that for retailers that have a really compelling value-based offer across stores and online channels, that there's growth to go after, and our businesses are benefiting from that.
Rob, do you think the RBA is getting it right when it comes to taming inflation down under and addressing the interest rate strategy here?
Well, look, I think the RBA certainly is much better credentialed than I am to make decisions about interest rate positions. And I think they've been very considered and measured with their approach. And certainly the actions that they have taken are no different to actions we've seen in many developed markets. Fortunately, we are starting to see inflation start to moderate, which is pleasing. So I feel like they've probably struck the right balance. But we also need to be aware that there are broader macro factors that are driving what's happening with inflation. So we're seeing continued wage growth, very strong wage growth in Australia. We're seeing power prices increase materially because of challenges with the energy transition, certainly on the east coast of Australia. And then as the Australian dollar starts to fall, there is the risk of some imported inflation flowing through. So although there's moderation in inflation, I think there's a bit more to come.